Hi everybody, it's Joshua Gaiman with joshuaGaiman.com. I wanted to take a minute today to do a quick video for all you silver and gold bugs out there, and I want to question a lot of people that call themselves gold and silver investors. What type of investor are you? And the reason I bring this up is there's two types of investings, whether it's real estate, precious metals, whatever, stocks. You can invest as a technical investor or a fundamental investor. Technical analysis and fundamental analysis. Now, technical analysis is looking at charts, graphs, recognizing patterns, trends, and so on and so forth, and making investing decisions based off of that information. Fundamental analysis is looking at the nuts and bolts of the commodity behind what you're investing in. For example, if you're investing in silver and gold, technical investing would be looking at the graphs over the last day, 3 days, month, 90 days, 6 months, so on and so forth. Fundamental analysis is going to be looking at what's going on to direct the pattern that these charts are going. For example, with precious metals, if you are looking at fundamental analysis, you're going to be looking at things like that all countries right now, all developed nations are operating with a fiat currency. You're going to look at governments printing money. You're going to look at inflation and things like these to formulate your investment strategy. And I think a lot of people really invest under kind of a mix. They invest, a lot of people I think get excited and dive into investing in silver and gold, especially probably silver, based on fundamental analysis. They hear Ron Paul talk, they hear Peter Schiff, they hear people talk about this devaluation of currency, hyperinflation, and so they look at silver and gold that, hey, it's a matter of time before the price on these commodities rise substantially, so they invest in gold and silver, and they say it's to be a hedge against inflation, but then they look at the patterns, hourly, weekly, daily, whatever, and they get freaked out because it dips a little bit. Now, if you're a fundamental investor, you don't really necessarily need to be looking every day. Now, don't get me wrong, there is an advantage to having kind of a mix. And myself, I would say I'm more of a fundamental investor when it comes to silver and gold. However, I do implement some technical strategies, not very much. Basically, I just look at it on a daily basis, and when I see big drops, those are the times when I go in and buy. I look at it like, hey, it's on sale, I'm going to buy more. But I don't worry about what I've already bought at a higher price and look at that as a loss at all, because I'm constantly taking money that I have to invest and acquiring more of the physical gold or silver. So obviously I want to get as much as I can physical gold or silver with the dollars that I have, so I'm going to go in and buy when it's on sale. The reason I bring all this up is because I think a lot of people, with the shakedowns we saw in 2011, with silver going from $50 down to $30, and then again from $43 down to $26, right now silver is really, it's gone up a lot. I think we're at just under $27. The new year, it's November 10th, and I looked 5 minutes ago, and silver spot price was $29.95, so basically $30. That's a significant increase in 10 days. And a lot of people are probably going to get excited and dive back in. Well, if it rolls back to 24, then they're going to get scared and back off again. So what happens is that when there's all this sideways activity going on, people that call themselves fundamental investors, they get shaken out of the market because they're looking at the technical stuff. So what I advise, what I do, is I use money to invest in gold and silver that I don't need or don't plan on needing for the next 12 months. So if silver or gold goes down a little bit, that's okay, because I don't need that money right now anyways, and I'm just looking at acquiring as much as I can before the black swan comes around the corner and we really start to see inflation and the price of these commodities really start to shoot up. I'm not worried about $5, $10. I'm not even worried about $15, $20. Don't get me wrong. Like I said, when it dips, I go in and buy more because I can acquire more with the same amount of dollars. But I'm not looking at these ups and downs and letting that emotions take a toll on me in my investment strategy. My investment strategy has been the same, and it continues to be the same. Acquire as much of the physical metals as I can with the money that I have to invest in that I'm not worried about having access to for at least 12 months. If you're using money to speculate on gold and silver that you might need to get back in a month or a couple months to pay rent, to put food on the table, whatever, that's not money you should be investing in the first place. And don't get me wrong, you probably hear me say all the time that cash is trash, but you have to convert gold and silver back to dollars before you pay your electric bill. And you're paying premiums on these physical gold and silver. I'm paying right now about $4 over spot price for my Silver Eagles. So if you're going to get killed on premiums if you're buying and selling all the time. So that's why I say I like to take the money that I know I'm not going to need for at least 12 months and slowly acquire more and more of the metals. Over a 12-month period, I'd be really surprised if silver dropped, but if it did, I'm still really not that worried. It just means the black swan was a little farther from the corner than I thought. So I hope that makes sense to you guys, and I hope you learned something, and we'll talk to you soon.